Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look at Supermicro Computer's stock today, focusing on its earnings per share and price to sales ratio, both currently and based on the guidance management has provided, which in this case will bring us to its period ending December 31st, 2023, and its year ending June 30th, 2024. Then we'll close by applying our findings to its current technical chart. Also note, we'll be covering an alternate approach to valuing this stock that you want to stick around for. Before we get started, please tap that subscribe button. And if you find this video informative, give it a like. There are chapters below if you want to skip ahead to a certain section. And if you have any questions or notes, let me know in the comments. Starting off with its current price to earnings analysis, we have at the top its current trailing 12 months earnings per share of $10.83. On the top right is the breakdown of that figure by quarter. Through some research of the company's past trading history, I found that the company primarily trades between 10 and 20 times earnings. With that information, we can calculate a fair value range of between 108 and 217, thus making the price of $436 appear wildly overvalued, heavily favoring the seller side. Next, we have its price to sales analysis, giving us another way to value the company. We have at the top its current trailing 12-month sales of $7.39 billion, and a breakdown by quarter for that figure is in the top right. We also show the shares outstanding of 57 million, resulting in the company having a $129.67 in sales per share outstanding. Through some research, I found that the company primarily trades between 0.4 and 0.7 times its sales. This range has recently been far exceeded, leading me to create an alternate way to value this company, which we'll get to shortly. For now, with the established range, we can calculate a fair value range of between $52 and $91. Again, making the price of $436 appear wildly overvalued, heavily favoring the seller side. Looking ahead to its next quarter expectations, we can see drastic increases in its sales and earnings. Sales projected to be between $3.6 and $3.65 billion for the quarter, and earnings per share between $4.90 and $5.05 for that quarter. When applying this guidance, I used the midpoint of both of those ranges to arrive at the result shown. On the right side, its sales and earnings per share has been updated based on this guidance. Also, we are assuming its shares outstanding will be the same and that its net income will be the estimated result of its updated earnings per share times the shares outstanding to achieve that $720.7 million figure in net income. Applying these estimates to our researched fair value range for price to earnings, we have a projected fair value range between 127 and 253. Even with the higher expectations for the company's next quarter, the price of $436 still appears tremendously overvalued, heavily favoring the seller side. Shifting to the price to sales analysis of the projected next quarter, we can estimate a sales per share figure of $161.63 by using the metrics discussed previously. Applying these estimates to our researched fair value range for price to sales, we have a projected fair value range between $65 and $113. Again, even with the higher expectations for the company's next quarter, the price of $436 still appears tremendously overvalued, heavily favoring the seller side. Looking even further ahead to its guided full year results, we can see management expects continued increases in its revenue, with sales projected to be between $10 and $11 billion. At this moment, I want to point out that it's highly likely the company is going to post sales of between $5.7 and $6 billion at the midpoint of its fiscal year, making me wonder if we'll see an update to management's full year guidance for sales to something higher, like between 13 and 14 billion, but that's speculation. For now, let's stick to the guidance given. I'm using the midpoint of management's guidance, which would be 10.5 billion in revenue. And by making some assumptions in its performance based on recent results, we arrive at an estimated net income of 911.9 million. Assuming shares will remain constant at 57 million, will give us an estimated earnings per share of $15.94. Before I move on, its shares outstanding is another point of interest for me, as I expect to see it increase to between maybe 61 and 64 million shares outstanding. But again, that's speculation. We'll adjust our figures going forward as they're provided. Applying these estimates to our research fair value range for price to earnings, we have a projected fair value range between 159 and 319. Even with the higher expectations for the company's full year, the price of 436 still appears tremendously overvalued, heavily favoring the seller side. Pivoting to its price to sales analysis for the projected full year, we can estimate a sales per share figure of $184.21 by using the updated metrics discussed. Applying these estimates to our research fair value range for price to sales, we have a projected fair value range between $74 and $129. Again, even with the higher expectations for the company's next quarter and next year, the price of 436 still appears extremely overvalued, heavily favoring the seller side. As a midpoint summary for our earnings per share calculation so far, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for next quarter ending 12/31/2023. As a midpoint summary for our price to sales calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for its next quarter, December 31st, 2023. Continuing to an alternate approach to valuing this company, I felt it appropriate to do additional research into this company's industry due to the company's recent high growth in its revenue and earnings per share, leading to the company trading at an extraordinarily high multiple compared to the historical average. Upon review of 9 competitors also providing IT solutions, an industry average has been established. The industry average range for price to earnings is between 16 and 24, with an average of 19. And the industry average for price to sales is between 1.6 and 2.7, with an average of 2.1 times sales. The price to earnings change does increase the multiple, but not by much. Therefore, a modest increase is expected to occur. Then the price to sales multiple does change considerably, increasing by more than 4 times. Therefore, a big change is expected to occur in this fair value calculation. Let's see the results of applying this alternate approach. Kicking off this section with our alternate current price to earnings analysis, we're using all the same information as the original analysis, with the one change of its PE ratio range now set to the industry average, which has the low of 16 and the high of 24. This will be our range going forward for all the alternate price to earnings slides. With this adjustment, we calculate a fair value range of between 173 and 260, resulting in the stock still appearing overvalued, heavily favoring the seller side. Next, we have its alternate current price to sales analysis. Similar to the previous slide, all the information here is the same compared to the original analysis, with the one change of its price to sales ratio range now being set to the industry average, with a low of 1.6 and a high of 2.7 times sales. This will be our range going forward for the alternate price to sales slides. With this adjustment, we calculate a fair value range of between 207 and 350, resulting in the stock still appearing overvalued at 436, favoring the seller side. Looking ahead to its alternate next quarter expectations for price to earnings, with our change, the expected fair value range has increased to between 203 and 304, leading to a similar result as we've seen before, with the current price of 436 appearing tremendously overvalued, heavily favoring the seller side. Shifting to the alternate price to sales analysis of the projected next quarter, with our change to the industry average for reasonable price to sales ratio, we now have an expected fair value range of 259 to 436. With a current price of 436, it is now on the line between fair value and being overvalued, still favoring the seller side. Looking further ahead to its alternate guided full year expectations, after our update to the PE ratio range to the industry average, we calculate a fair value range between 255 and 383. The price at 436 remains to appear as overvalued, heavily favoring the seller side. Pivoting to the alternate price to sales analysis for the projected full year, after our update to the price to sales ratio range, we calculate an alternate fair value range between 295 and 497. The price at 436 is now within our fair value range, still favoring the seller side. As a summary for our alternate earnings per share calculation, at the top we see where it currently stands today, and on the bottom we have our alternate forecast based on management's guidance for its next quarter ending December 31st, 2023. As a summary for our alternate price to sales calculation, at the top we see where it currently stands today, and on the bottom we have our alternate forecast based on management's guidance for its next quarter ending December 31st, 2023. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight levels where, to me, it makes sense to either add to the position in green or take profits in red. This image includes all the stock valuations we discussed. It's small, but there are labels for each set of boxes on the right. As an example, the highest set of red boxes and green boxes is paired to the alternate price to sales analysis we covered. Currently, the price is way above even the highest reasonable range we calculated. It's actually near the top of our highest fair value range estimated for next quarter. I'll update these ranges as the results come in. Otherwise, technically, it's far outpacing the slight uptrend we noted beginning June 2023. This June 2023 uptrend best lines up with our alternate price to sales valuation and is on the high end of the alternate price to earnings valuation range. Let me know your thoughts and how you feel about this one in the comments below. Thank you for watching. Please subscribe.